Back at the beginning of December, I introduced you to a stock I really like, Cbre Group, the symbol is CBG. It's the world's leading purveyor of commercial real estate services. The idea behind this stock is that Cbre lets you invest in real estate without actually owning giant buildings or buying shares in real estate investment trusts. That's a high-yielding group that gets a lot less attractive when rates go higher, which is what so many fear. Long story short, while Cbre owns some properties, they mainly help real estate investors by providing outsourced leasing, sales, appraisal, development, and property management services. I figured the stock would get a lot of love from institutional investors who want some real estate exposure but don't want the risk of owning a REIT in a rising rate environment. Sure enough, since that interview nearly 3 months ago, Cbre's stock has rallied nearly 20%. 20%. Most of that move coming in the past couple of weeks after the company reported a monster good quarter. Let's take a closer look with Bob Sulentic. He's the president and CEO of Cbre Group. Learn more about the quarter and the details and what's happening here. Mr. Sulentic, welcome back to Mad Money.
Good to be with you, Jim.
Boy, I got to tell you, Bob, you hit it out of the park. When you came on, you said things were good. It was funny because it's like I think people were saying, I don't know. But the fact is, you've got strength in almost every market, and Asia is leading. Around the world, things just seem to be much better for commercial real estate.
Well, Jim, a couple things happened. Number one, we took market share in all three regions of the world, the Americas, EMEA, and Asia Pacific. Number two, the fundamentals in the sector that we compete in, commercial real estate, services, and investment, are better than a lot of people think they are. And as a result, the combination of those two circumstances allowed us to have a really nice quarter and a really nice year with earnings up well into the double digits, both on the quarter and the year.
Well, I think that one of the things that people seem to misinterpret is that when lending was tough or difficult, there really wasn't a lot of building. And what happened is you have to use you guys in order to be able to outsource because it took a lot of special qualities. This is something people realize that companies aren't that good at doing what you do, right?
We are a commercial real estate firm that specializes in doing real estate work for companies that do other things as their primary source of living. So when they decide to get really focused on what they do, operate their buildings and facilities better, operate their buildings more cost effectively, they turn to us, and they turn to us all over the world increasingly. That's played very, very well for our company.
Well, I thought that one of the best examples is that today we see that JCPenney is going to surprisingly close more than 100 stores. And you figure, okay, well, does JCPenney even know how to close a store? They use you guys when they want to make a real estate move. This is good business for Cbre when something like this happens.
We do a lot of business for companies like JCPenney, for retail companies, but for office, industrial, and other parts of the sector as well. Jim, I would say that there's a little bit of a misconception about what's going on in retail also. Okay. Retail was a very healthy part of the commercial real estate sector last year. Rents were up actually more in retail than they were in office space, and we're expecting rents to be up again this year in retail. There just hasn't been a lot of new retail built. Occupancies are good. There's some concepts that are playing very, very well, so that's been a really good market for us.
Well, could you tell us? I mean, I think you're absolutely right. I'm sure our viewers right now are saying, how can that be? What are some of these concepts, and what makes it so that these things are more enduring than people realize?
Well, people want to go somewhere and enjoy themselves. Food and beverage is doing very, very well, but any kind of retail real estate that offers an experience that people find interesting seems to be doing particularly well. There's pressure on B and C malls, but when you go to the better malls, they're doing quite well. High street retail is doing quite well. Retail around urban areas where there's multifamily occupancy opportunities for living, doing quite well.
Well, Bob, I got to ask this because you're probably the most intelligent real estate guy I deal with. What's it like to have a real estate guy in the Oval Office?
Well, I think it's going to prove to be healthy for the economy. That's what we're seeing for the next couple years. Obviously, the talk about tax rates getting better is helpful. The talk about infrastructure spending is helpful. Lower regulation could be really good for a lot of our clients, particularly financial institutions. So we're hopeful that good things will happen.
One last thing. I did a special on the Freedom Tower, World Trade Center. And the talk in New York was that with Hudson Yards and with World Trade, there's too much space. Is it really true that New York City has too much space for demand?
The amount of new space being added relative to the basis space that's in place, Jim, is very, very low. We do a lot of work, both at the World Trade Center and Hudson Yards, and big tenant demand in both of those places. We don't expect there to be a significant overhang at all. The markets there have performed really well, and we had a great year last year in New York, and we're encouraged about what we're seeing early this year.
Wow. Well, I got to tell you, when I read through your quarterly, I felt really terrific about the whole world. And you're doing a lot of great stuff. And what a remarkable quarter you had. Bob Sulentic is president and CEO of Cbre Group. This stock is going higher. It's got so much going for it. You got to read the quarterly. You'll know exactly why I just said that. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.